Pete has something really educational to share. So let's.
I just wanted to add something into the field. Like, money doesn't make you a better person. And there's an important saying, which is that money can't buy happiness, but you can park your yacht next to where happiness is.
I really like that. I really like that. Thank you. If you've read the post I did about that, exactly that. Money is an amplifier. Money does not ruin character. It amplifies and shows your true character. So if you're a grumpy person without money, trust me, you're going to be grumpier with money. It's not going to solve your grumpiness or your bitterness in the world. It's just going to make you a rich, bitter person.
And if you're fearful without money, you're going to be much more fearful with money.
Yep, correct.
Especially about money. It's an interesting one.
So it's okay, and we advocate desiring money. It's definitely better than repelling the idea of money. Desiring is definitely better, but don't get attached to it. And don't think that you will be happy with it. You will be happy with what you do with it, but not with the actual having and hoarding money. I think those are really good points to throw in before I think you're going to share. So Peter's going to share his screen, and I think he's going to talk about Robert Kiyosaki.
Yeah, so this is a model from Kiyosaki, which is called the cash flow quadrant. And this is, I think, an easy way to understand the different ways of earning money, and then that translates into building wealth, which is really important. So we've got 4 quadrants here. E is for employee. S is for sole trader, so individual entrepreneur. Even if you have people employed by you, but you are still operationally involved in the business, basically you stay in S, in sole trader. B is business owner, and that's when you have a business that you can actually step away from. You don't have to be completely out of it, but ideally you own a business and you don't really do that much in it operationally. And then I is investor, where you're just purely investing. So for many people, they'll kind of go along a journey of starting here in employee, and then they might decide, all right, I'm going to start a business, and they make their way down to sole operator. And if they're successful, if they learn about business, learn about hiring teams and create good systems and structures in a business, it might end up being, a real business that actually runs without them, which is in the position that I'm in now. And then from there, the next step is to move into the investor quadrant, where basically you're just playing the game of cash flow. You're putting money into opportunities and you're waiting for that money to come back. And I've got one foot in that camp and one foot still in the business owner camp. So ideally, these two here are the two where you get to maximize and accelerate your wealth. With entrepreneur quadrant and the sole operator quadrant, there's nothing wrong with being in those quadrants. Employee quadrant. There's nothing wrong with those quadrants, but they don't allow you to build wealth. And so moving the wealth that you do have, or the income that you do have, maybe in investing into a business or investing into investment opportunities. If you're a sole operator, working towards being in a business or taking some money off the table for investments. That's how people use the term putting money to work for you, or having your money, create more money. Basically, in the 2 right-hand quadrants, that's where your money starts to make more money for you. And it starts to accelerate very quickly as well. Last year, I entered a business, and that cost me about $150,000 to enter into the business transaction. Yet I've had that money returned back to me in profit in less than 5 months. And yes, I've done it 10 times before. I've been running businesses for 20 years. Like, I've got the skills to be able to do that. And so that was, a deal which for me was pretty easy and straightforward to do. But the reality is that I now own $1 million business that I invested 150 grand into, and that's made 150 grand back in 5 months. And it's going to keep making that back probably every 6 months for the next 10 or 15 years till I sell it. And so with that extra income, I then, go and do other things with that. And so when you're in these quadrants, what starts happening is it just basically, it radiates. It just grows bigger and bigger and bigger if you're strategic and smart with doing that. Because it just then multiplies and it then grows. So if right now you're in the E quadrant or you're in the S quadrant, that's totally okay. It's then a matter of not necessarily jumping into the other quadrants, because quite often we can look at investment opportunities that seem like a really great way to quickly make money, where it might actually make more sense instead to invest in our education around building wealth and around what we do with our money. And I've got to be very careful not to go into the zone of giving investment advice. But what I will say is that with investments, you've got different levels. Like, you've got green levels of investments, which are pretty, they're pretty safe, but lower returns, like maybe something like index funds. And most of my money just sits in index funds because I do my high risk stuff in business. That's like uber high risk, uber high return. But with investing in general, let's say if you're a consumer or retail investor, they would call it, you've got 3 options. Then, you've got your kind of like medium risk, medium return, and that might be property, might be investing in a single stock in the share market instead of an index fund, which is a whole family of stocks. And then you've got your high risk, stuff like crypto, MLM, multi-level marketing type things, putting money into a friend who gave you a stock tip in a company that you know nothing about. Yeah, sure. Like the upside might be massive, but also at the same time, the risk is massive as well. And so, again, this is not financial advice, but what most people would do in the financial services world, if they were advising you, they'd probably put like 80% in green, maybe like 15% in yellow, and then 5% in red. Because the return that you'll get on the super risky ones will basically, outweigh the small amount of capital that you're putting in there. The problem is, what many people do is they're an employee and they get that hot tip from a friend and they put it into crypto or blah, 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 or whatever. And, and look, I'm not saying like crypto is like a bad thing, but it is a highly speculative investment. And I'm just using that as an example of where you may choose to put your money. Now, business, honestly, that's totally okay. Pretty much all red. Now, doesn't mean that that's a bad thing. What it does mean is play to your strengths there. And maybe if you're playing to your strengths, then it becomes yellow. If it's an industry that you know, or someone that you know really well and they've got a really great track record, that you're working with, or maybe you're involved in some way in the team and you can see the success of the business and how it's going to work. And over time, when you build your competency and you build your skills around business, which I've done over many years, I'm now in the position that when I put 150 grand into a business, I'm pretty much guaranteed to get my money back. Like that's a great investment for me. And so where in, for example, like an index fund down here as an investor might earn me like 4% to maybe like 8% per year if I'm doing really well. I mean, if I'm doing really, really well, maybe they'll earn more than that. But on average, over decades, index funds tend to return like 4 to 8%. But I might earn like 30 to 50% per annum investing in businesses or more. Sometimes I double my money in the same year. If it's a really, really great deal. But conservatively, it's going to be somewhere between 30 to 40% per annum that I'm earning on the money that I'm investing there. So that gives you a little bit of a zoom out perspective on where you put your money after you earn it. And there's a really simple video which we'll link in the Facebook, which is basically, it says all the investment advice you ever need, you can put on an index card. It's like a 10-minute video, super simple. That's literally all you need. You don't need a million Reddit forums. You don't need gurus. You don't need to pay for any fucking courses. Like, follow that video and that's it. I know that because I've done it. Felina, that'll go in the self-work project, but I'm sure Sarah will share it in the group for those that are on the Zoom call. That's the income side of things. This picture here, this is the wealth building side of things. And so this is what you do to help you actually build wealth. Because, and the big underline under all of this is people who build wealth put their money into income generating assets. Let me underscore that. People who build wealth put their money into income generating assets. So that's a business that earns income, or a stock that pays dividends, or a asset that earns interest or increases in value, so you have a capital gain. But that's basically where you put your money, appreciating assets. And with the profit and the income that comes from those assets, whether it's business or another investment, reinvesting that is what compounds and continues to build wealth. It's really hard to get started. It's really hard to get started. And unfortunately, what a lot of people do, they earn their first 10,000 or their first 30,000 and they go all in on one high risk red investment, and then it goes and they get burnt and butthurt.
Can we reframe?
Sarah's about to jump in. So yes, what would you like to reframe? Do you have an improvement on my frame?
It may be hard to start. It doesn't have to be. You are subliminally imprinting that in our potential investors.
It's
reframing.
It's easier to make the second and third and fourth and fifth million than it is to make the first.
There you go. That's
doesn't have to be hard to start at all. It's actually super fucking simple.
Thank you.
Yeah, with the right mindset, with the right stories in place, it's actually really, really easy to get started and to get the ball going.
Yeah, you just reversed everything that we just did. It's not hard. It doesn't have to be hard.
And that's so easy that after you've done that, it's going to be 10 times fucking easier when you're on the other side of that first step. Yeah. There we go. How's that?
Thank you. That's a good rescue. That's a good rescue.
Cool. But this is from a book called The Cash Flow Quadrant. But I'd say if you haven't first read Rich Dad Poor Dad, that's probably the place to start.
Yeah.
And then this is more advanced stuff. But I've just shared with you the basic concept. If you listen to if you watch the index card video, and you take a screenshot of that and print that out, have the cash flow quadrant there as well. That's all you need to know about income and wealth building. The rest is mindset.
We'll put it on the comments for those who are watching, and I'll probably post this in our group as well, in the Triggerless Life exclusive. Guys, if you want more details on this. Now, I want to do a quick rundown. Thank you so much. That was really educating. That's definitely something that I would not have talked about because, it's so I appreciate that. It's a good supplement to this topic, real actual doing stuff, because you guys know I'm not a doing coach. I'm in the deeper level stuff of making sure that energetically, mentally, emotionally, you're actually ready to be doing this, so that when you do it, you don't sabotage yourself or you don't throw all your money away. So that's the difference in how I approach things. I take care of the underlying stuff so that when you start taking actions, they are inspired, aligned actions, and the universe will be backing you up. And so much easier. And it's not hard work.
It's 8:30. Are we
So-
going to spend some time together?
Yeah, we are. Okay, so
Okay.
summarizing everything. And if you guys have questions, we're happy to answer them even after this live.
Put
So
the questions
put
in.
them
Yeah.
on the live, or probably the live, because the Zoom chat will disappear. So if we're gonna sum this up, guys, be really clear. First step, if you're gonna take anything away from this live and this call tonight, is first step, be clear with where you are at right now. How much money do you actually have, right? Do you have any debt? Is there any, do you only have one income stream? Are there other ways for you to be earning money? That's the first thing. Just really getting to know where you're at, your relationship with money, and then inspecting the beliefs that you have written earlier. If there are things that you have not written earlier that you think is still evident and strong, that's holding you back from dealing with money, because I know that for some, they can't even talk about money. There's that. The resistance is so powerful, and because that, when you have debt, sometimes it's really painful, that they run away from it and they just don't even look at it. And it can be also shameful. There's a lot of stigma and shame around having debt, right? Being buried in debt. So be clear with where you are, confront your reality if you have debt, address and work on your beliefs about money that are holding you back or potentially limiting you, and also beliefs around deservingness, because they may also be potentially holding you back. Second, once the inner work is done, start doing action things like what Peter have said. Educate yourself. Okay, learn about income generating activities and wealth building activities. Those are two different things. Maybe a third one, management. Is that under the wealth building one? Money management.
Yeah, totally. Yeah, so that would
So
be
just
like
to-
stage 3 would be like managing and optimizing the wealth.
There you go. So that it
Yeah.
starts working on its own.
I'd see there's like 3 stages here. Sarah kind of alluded to it. The first stage is optimizing your income. And so like step number one is getting to a point where you're earning more than you're spending. And that's on the index card video. That's step 1, because immediately you've got a little bit of cream, not to put in a rainy day fund, because you'll find a rainy day to spend it all.
Exactly.
But to put it into investments that are going to grow.
Mm-hmm.
Because saving into a rainy day fund is not actually wealth generation. That's
Correct.
just putting money aside
Mhm.
to then spend. Anyway, sorry, getting into the weeds here. Step 1, optimize for income, get your income above your expenses, even if that means living with a little bit less, which I've done many times in my life, and I still do. I buy secondhand shit off eBay all day long, and Sarah like endearingly laughs when I do, because rather than spend $700 on something new, I'll buy it secondhand for $200, and that extra income goes to other things. Rather than buying the brand name Dyson vacuum cleaner, which my friends have, I will buy the $50 one from the discount department store. Sarah has a $2,500 fucking mobile phone.
Peter
Right.
has a second-hand phone that he
I
got
bought
from
mine for
eBay.
$500 on eBay, and it's three versions old.
So that's a good example of like who's better at I'm already okay. I'm speaking.
I'm adding color to just rubbing it in.
So that's thanks. That's a good example of like who obviously has better money management skills, right? So, but that's true. But you skipped my step. That again is important. Do the
Sorry.
inner work first. It's not just about jumping.
Oh,
into
none of this works without the inner work. Yeah, I'm just talking about the
okay,
functional.
the action part.
Yeah. The functional action part. Yeah, look, the masculine creates the structures and the feminine beautifies them.
So
Okay, so step 1 is optimizing for income. Step 2 is then starting to redirect the extra income into wealth building activities, into wealth generating assets. And then step 3 is you go into kind of like portfolio mode where you're managing and growing your wealth. But step 1, I'm not going to say it's the hardest, you may find the most resistance with,
Thank you.
And you will find that the rest get easier and easier. And it's about deserving. Like when you start putting those first bits of money away, even if it's 5% of your income, but it's going into an investment fund, and you say to yourself, wow, like this is going into a fund that's building my future, and the level of self-care and self-love, which is where we'll segue and circle back to how it's all about self-love and how we value ourselves. When you start doing that, it feels really good. And you want more of that. Mm-hmm. It's like, yeah, wow, I deserve this. I deserve to look after myself like this. I want more of that. I want to give myself more of this love. So that's the kind of practical, logical steps. I'll now pass to Sarah for
the beautiful part.
Of course, beautifying the structure.
So remember, if I'm gonna this is the light I want to end this call with. Everything that you're doing, it doesn't matter what you do and how good you are at it. In fact, you know what? I don't care if you become a millionaire. If your relationship with money is icky, you will not enjoy the money. I know so many people who are wealthy, but still are trapped in their scarcity mindset. They're still unable to feel free and happy and abundant. It's so weird.
And they're the ones that don't stop.
And they're the ones who are actually stuck in building more money. And it's like, they did actually exit the rat race. They just found a bigger race to run around with. And so, which is why I really, really, really encourage everyone to start doing inner work first. And because if you do, it doesn't have to be hard, I swear. It will still take commitment, okay? I'm not going to sugarcoat it. It will still take commitment, persistence, and actual doing. You will really need to learn some skills, but it doesn't have to be hard. It can be fun. And what I did when I started shifting when I started this call and shared with you guys my story that when I started saving for a rainy day, I felt icky and weird and constricted in the cash flow that I've been getting. So now I have a new name for my rainy day fund. Now I have Fun Surprises Fund, right? It's and it still is, because for a reason, I still want some to just put a stash away of like fun surprises, it can be something that I actually enjoy or something I want to buy for myself or a gift, right? And I also want to share a secret. I have a church of Sarah that I have my own tithing system. And what's that about? It's a message to the universe that, you know what? I put myself first. This money is for me. I'm going to spend this. And it goes to my church, to myself. And you can do whatever percent you want with that, I swear. And so I have a Church of Sarah type. I have a Fun Surprises type. And I created different fun, more positive energy words for my jars when I budget things. So be mindful of your energy, the energy and relationship that you have around money, especially when you're dealing with money. Most especially when you are dealing with money. Know what or where you're coming from. Is it coming from fear? Or Krista, hi Krista, I missed you so much. You have a church and a call. Yes, apparently I do. So it doesn't matter what it is that you're doing. Make sure that you're always coming from love. So yes, I am doing this out of love because I love myself and I love to be able to give to others as well. And I love the idea of enjoying my wealth. So yes, I am actually saving. And it's not like, oh my God, I need to save this because something might happen and someone can blah, blah, blah. And I'm going to run out. That is icky energy. Don't do that. So anything that you start doing from now on about money has to feel good. And one of the things that everyone hates around money is paying bills. So switch that. I just want to end this call with this one final tip. When money exits your energetic field because you pay someone, you pay a bill, you buy something, don't send out the energy that you're losing something. Remember, if everything is a reflection of you, if everyone's a reflection of you, if you are part of the universe, if you're part of the environment, if you are one with nature itself, you're not actually losing anything. You are not. So every time you pay a bill, even if it's just like a phone bill or pay for a meal, put your attention to what you actually receive, and then send a message to the universe in your mind and affirm, what I send out, I will return, I will receive tenfold.
I've got a frame on this, if you don't mind me
sure.
sharing. Like I love paying bills, and I love paying people to do things for me. And like I can't find, I paid someone tonight to move things from our studio into storage because the studio is not needed anymore. I have someone who cleans my house and stacks the dishwasher, and just I'm a big fan because I value my time above everything else. And so I was just reflecting on, what's my relationship? Because I haven't paid bills in a long time. I've got staff who pay my bills, right? So I was thinking what would it feel like? What would it feel like if I was to pay a bill right now? And I thought, fuck, I'd feel really happy. I feel really happy because when I want to call someone on my mobile phone plan, I'd much rather pay $100 a month for a mobile phone plan than to run half an hour to the other side of town and deliver that message. I'd rather be able to call someone, right? It's much better for me to pay $100 a month on electricity than to jump on a bike and generate my own electricity, right? So I prefer to have those resources. So it's great, let me please take my money so I can get that value and I can keep my time and my energy.
Yeah, I like that. Let that be the meme for the night. Please, universe, take my money and return it tenfold. And in every, remember that if you're holding your money like this, if you're holding onto it so tightly and you have that scarcity mindset, you're not only closing the energetic door for money to come out, you're also closing the door that lets it in. Did that land for you guys? That's only one path, and it doesn't actually matter which direction the money is flowing. Is it flowing towards you or away from you? The flow is still a flow. Movement is really important when it comes to receiving. In fact, in order for you to start receiving more, you might actually need to let go of other things. It's not always financial. That's why business and service and money is actually one of the best measurement of energetic exchange. That's why when I will feel icky when I receive money and I didn't give service, because I wouldn't feel like I earned that, right? I have to be giving something out, like a book or an idea or coaching or service or whatever, but there has to be an exchange. So it's not always money. So it's the same thing. It's just that at that moment, you're the one where money is coming from and you're receiving something else in return. So that is one path where money is flowing towards and away from you, but it's that one path. It's one strong path. You don't want to close it. So when you're letting money out, be happy. It's okay. It really is going to come back as long as you don't cut that off. So don't cut that off. Be okay with actually spending money. Be happy with it, but don't become a shopaholic. Okay. Don't become a shopaholic. Be smart about it, but just really don't have that resistance in paying bills, because that's one of the biggest trap that keeps us resisting to receive more money. I think that's it. We are all good. If you guys have any more questions, for those who tuned in on the live, thank you so much for staying with us. And you guys, thank you for being here. I know I didn't announce the call tonight, and I'm really glad that you joined us. I hope this was beautiful and helpful. We're going to say goodbye to the live. Guys, wave. Bye.
And I'm in the Facebook group, so you're welcome to tag me in posts and I'll happily answer any questions.
Thank you so much for being our special guest, Peter Moriarty.
See you guys.
Ending the live now. Bye.